Good morning, everybody. Hi. Thank you. So it's always a pleasure to be the first panel in the morning because you get the best attention. But it's also a challenge because you get the most challenging questions, right? Everybody is attentive. Anyhow, we started our FinTech journey. I would say India started around 2015. But at least from the industry perspective, we started getting involved. The companies started getting together and then forming associations and trying to understand the implications of this, not only for the enterprises but also for the common man at large. Okay, from 2017-18 onwards, we had the first FinTech forum in Bangalore, Hyderabad, way back in 2018, under the leadership of Jay Chaudhary at that time, and I attended that at the time. And again, we organized many FinTech forums, both in Bangalore, Hyderabad, Tamil Nadu, Chennai, which is part of Tamil Nadu, of course. And then in Calcutta and Delhi, all of together. And we have formed a lot of special interest groups as a part of that FinTech forums. We created various interest groups around lending tech, wealth tech, AI, cybersecurity, etc., etc. And then there are many youngsters who are participants in those groups and they actively contribute to that. So now today we have a very interesting panel, very experienced panel with us. So I would rather listen from them and then understand the implications, how the industry has evolved, what are the latest trends, okay, and where is it that the entire industry is moving forward. So let us start with the introductions from India.
Hi, I'm Anandya Karmakar, about 2.5 decades in the financial services industry. I started with consumer lending with a company called City Financial way back in the late 90s and cut my teeth in lending, so everything in lending which had to be done. I did some life insurance. I was, running the life insurance business for ING Life Insurance for West India. Then I moved to ICICI Bank. I started with heading their wealth management business. So lending to life insurance to investments. Then back to lending. I've been with Aditya Birla Capital for now 6 years. Was heading the digital lending business. Then the housing finance business, all the non-sales functions. Now I head digital and analytics for the entire group, Aditya Birla Capital. Aditya Birla Capital is comprised of life insurance, health insurance, lending, housing finance, mutual funds and stock broking. So digital and analytics for the group, as well as I head digital for the mutual funds company. So that's about myself.
I'm Ramesh Loganathan. I'm a faculty at IIT Hyderabad. I've been in the tech industry for a long time, and in US and in India. I moved to Hyderabad in 2000 to join a startup in the early days of Java. There was a Java app server startup based out of Hyderabad. So moved here, joined the startup, and it's been here since. Part of the company got acquired by a Boston-based company and was running that lab for many years. In parallel, I was also started engaging with IIT as adjunct faculty from 2002. And then after 14 years, in 2016, I moved as regular faculty. I'm a faculty at IIT Hyderabad. And I involve a lot with startups. IIT Hyderabad has a lot of research and research-led innovation and research-led solutions. So I anchor some of those efforts. And IIT also is home to one of the largest incubators in the country, academic incubators, CIE, which is the reason T-Hub happened on our campus. Because of CIE, we helped structure and start T-Hub on our campus before they moved to their permanent building. And so I'm very involved with research. I'm involved with a few other academic institutions. I also teach at IIT Hyderabad. I've been involved with other incubators, BIT, IIT, IIT Delhi, and a few others. Try to do something. I consider it to be a disastrous failure at JNTU. It just didn't work out. But spent almost 6 years trying to get some innovation programs at JNTU, university-wide programs. Anyway, so that's my world, industry, academics, and startups. So more later.
Thank you, sir. Good morning to all of you. I'm Anil Philip. I'm the General Manager for OSB India. OSB stands for One Savings Bank. I've been in the financial industry for about 20 years, 2 years in insurance and 18 years in the banking sector. So the bank that I work with right now, we got about 35 billion in assets. We got about 2,000 employees, 1,000 in the UK, 1,000 in India. So we kind of manage the assets out here. So I've been into the UK, Europe almost every year for the last 18 years. And I can say that, FinTech in India is far more advanced, far more ahead than most of the countries that we call as developed countries. So we are at a good place and people are coming right now out here looking out for solutions, and we are at the right place at the right time. Thank you.
So, Namaste, I'm Vishnu Chundi. I've been a FinTech employee now to a FinTech founder. So I did my undergrad at BITS Pilani and then did a research at the University of Geneva on quantum cryptography. That is how I got into this whole world of tokenization and digital assets, cryptography, Bitcoin, blockchain. And then one of my heroes was Professor Stephen Hawking. So I wanted to go to his college at Cambridge and study nanotechnology. I had the honor of meeting Professor Hawking a few times. And then I got sucked into the wonderful world of FinTech in London, where I was the first product manager at the UK's first FinTech unicorn. That is when I saw the power of FinTech and what you can do. And after that, I started an MBA at London Business School, and on day one, set up my company called Asset Vault. We're headquartered in London with a couple of offices in India. Recently in India, we've also launched a new will writing brand to help Indians with succession planning. It's called Asan Will. So that's me in a nutshell.
Thanks to all of you for the nice introduction. So I'll just give a brief snapshot of the industry, how it has evolved. Can anyone believe that there are 23 unicorns already in the FinTech space today in India and another 20 or 25 unicorns? Evolution which has happened in the last just 6-7 years, okay? And all of us know already the impact of UPI. UPI is not only, prevalent in everyone's life, but it also going to become prevalent and relevant in even the lives of other countries very soon. The way the Aadhaar, the India stack, and the entire digital public infrastructure has evolved is going to give a big fillip to the entire FinTech industry in India. And there are a lot of new frameworks which are coming up, like account aggregator framework, open credit enablement network, ONDC. I'm sure you must have heard of all of these terminology already in the press and things like that. And they are becoming common adoption themes across the board. Okay, so without much ado, and there are almost 3,000 startups in the country today, and you take every space, whether it is wealth tech or whether it is investment management side, or whether it is lending tech, or whether it is payments. Of course, all of us know the success of payments industry already, or in cybersecurity, or in some of the AI impacting finance industry, both the legacy banks as well as the new emerging banks. So there is a whole lot of evolution and development which has already taken place in the country. We are soon going to see our own completely digital banks in the country, which is already happening. And RBI is also thinking of CBDC, which is essentially a digital currency. Some of these we are going to see in our lifetimes becoming a commonplace within the next 5 to 8 years. So from that perspective, I think the way the entire industry is evolving is one of the fastest growing. It is almost growing at 25 to 30% every year. Okay, and some of the sectors like lending tech and wealth tech are growing even at a higher pace. Okay, so what we will do is we will go around the panel, and we have got varied experience across various sectors. We'd like to hear their views on how the space is evolving, what are the challenges, what are the policy guidelines. Our government is doing a lot of stuff, not only central government, but even the state governments are doing a lot of stuff. So how the government policies are emerging and what are some of the challenges. Okay, we'd like to go around the table. So first let me start with Anindya. Anindya is a veteran in the entire FinTech, in the financial services space. So Anindya, how do you see FinTech emerging in the complete financial services space, whether it is wealth tech or insurance space, or what are some of the startups you see and how is the potential? And also opportunities for youngsters to look at new opportunity spaces.
Thank you. Thank you.
Thank you.
There is a lot in that question. It's very difficult to figure out where to start and where to end, but let me attempt to give an answer which may resonate with all of you. I think first thing to understand and realize is that doing anything in the financial services space is does not lead to an overnight success. It takes time. And the best way I can explain that is to take the example of two institutions that all of you have heard about. One is HDFC Bank and the other one is Bajaj Finserv. And 15 years down the line. So for the first 10 years, so HDFC Bank was valued at $8 billion in 2008. 10 years down the line, 2018, it was valued at about $80 billion. So it has moved about 72 billions. And in the next 5 years, it moved to $165 billion. So it kind of added the same valuation in about 5 years. And same happened with Bajaj Finserv. It was about $2 billion in 2008. It moved to about $14 billion in 18 and 32 at 2023. So you can see there's a compounding which happens, but it takes time. When you look at the fintech industry, I think as Ram mentioned, 3,000 plus. Somewhere I heard about 10,000 plus startups are there, and 3,000 of them are fintechs. If you look at the fintechs, they're about $100 billion in valuation, $100 billion, and that has largely happened over the last 10 years because of multiple factors, and I'll touch upon that. Whereas the banks, the big banks, all the private and the public sector banks that if you put together is about $600 billion. So 100 billion fintechs, which has happened in 10 years, banks about 600 billion happened in 30 to 50 years. Why am I stating these numbers? Because now in the next 5 years for the fintechs, taken off, but it will take up. And why do we feel that it will take off in a much bigger way? Because there are certain tailwinds, which this country has created for the fintech space. Firstly, I think, this is something which is common for, every company, every industry in the digital space, which is your smartphone penetration. We all understand that is driving, pretty much everything today. Smartphone penetration in rural India, which is kind of, doubled in the last 3 years. And of course, the number of people who are using internet. So that's one part of it. The second part is this whole India stack story that, we have heard about, the digital public infrastructure. And I think 3 of them Ram mentioned, which is account aggregator ONDC OCIN. But of course, it started with your Aadhaar, then your UPI, and the entire India stack, which got built upon that. Now, this has created a foundation for a country of 1.4 billion people, where all innovations are happening, and of course, there are many more which are coming. There are almost 20 plus digital public infrastructure which is there in India. Some of them are work in progress. And in the insurance side, on the lending side, on the wealth tech side, many of them, right? So this is the second, piece. The third piece, I think, which is going to be the story for India for the foreseeable future, is the penetration of financial services. And I think compared to some of the global advanced economies, you would find that penetration in India is very, very, small, in single digits in most of the cases. And that, of course, again, takes time to grow, simply because your financial service is actually a story of how much of disposable income you have, right? So insurance, investments, it comes from your disposable income. And your per capita income, till the time it does not grow and reach a threshold and then crosses that, the growth does not happen. And so we are at very close to the threshold of $5,000 of per capita income. And you would see, and typically this is what we have seen in China, when you start crossing a certain threshold, things start taking off again in a spectacular manner. And so we are very close to that. So the penetration is the story which is going to drive, some of these things. Right, so this is, where we are. And now when you talk about, so this is the opportunity at a very high level. When you talk about in every space, there is an opportunity for the fintechs. And let me give you one example each: in insurance, in lending, and in wealth. So in lending, we know that there is a large percentage of population, which is called NTC, new to credit. I think it is close to about 200 million, about 220 crores of people who are new to credit. It's a large opportunity again. And if we have the time, we can dive deeper into how this fintechs can enable that. But that's one clear area. think about D2C, but that's not really the story of fintechs. In fact, in India, a lot of the fintech success stories is in the B2B space, in the SaaS space, because companies need help in terms of leapfrogging, pole vaulting, whatever we may want to call it, and that's where a large play of fintechs is happening. So I just thought I'll mention that before I hand this over to Mr. Ram.
That was a great overview of the entire financial services space, okay, and the new emerging spaces which are coming in that. Especially lending tech is taking off in a big way. It's supposed to be one of the biggest potential areas. There is almost close to $600 billion gap in terms of SME funding today, which can be bridged by all the HNIs who are all sitting there, okay? And then, now let us move on to the next question, next topic of discussion within the fintech space. There are a lot of technologies which are evolving and impacting the entire fintech space. Obviously, we have all heard of AML, cybersecurity. I mean, these are all being heard of over the last 8 to 10 years already. But none other than our own professor can give a bigger glimpse into the emerging technologies like quantum computing and others, which are going to impact not only fintech, but in general, the other startups as well. But particularly with respect to fintech. Yeah. Thank you. Go ahead.
Sure, Ram. Yeah, like you said, I mean, there's a lot of attention to AI in the last couple of years, especially with ChatGPT and LLMs and such. But like you rightly said, they didn't land from the skies overnight. Even the current technology that is so hot have been around for, right? Companies have been playing around with it. Just there's a huge hype around what's happening right now. And there's a lot of FOMO. And so everybody is clamoring to go do something. Nobody wants to be left behind. But thankfully, I think the hype is settling. There are reports already that says like less than 1 out of 10 enterprise projects have succeeded in their efforts to adopt LLMs and such. It's not that magical as people think, that you just take an LLM and like you can make it do anything you want, fire people, right? It's not. Like with any technology all through the years, it enables and it kind of automates some functions, but it's expensive. And so it means like the right problems where whether it is an optimization or improvement of efficiencies or accuracies or such, for the right problems, companies would invest and get them built because it is expensive to build. And expensive to run is a different problem, but it's expensive to build. So it means like, well, yes, in theory you can do anything, but in practice it's not going to happen like it didn't happen. Like we've had all the people talk about in the early days of BPM that like whole BPO industry will be fired. In the early days of RPM, we had the exact same predictions. Early days of AI, I mean like some top tier analyst firms that predicted that in India in 4 years we will lose 50% jobs. If anything in those 4 years we added 50% jobs, right? Forget losing 50% jobs. I don't think any job was lost. And quite to the contrary, we added 50% jobs in those 4 or 5 years. And so same thing. So all those are all on the other side, right? Those doomsday predictions don't happen. Value is possible. Not just LLMs is of course overrated, but there are all kinds of AI. It could be simple conversation, a lot of computer vision coming into play, a lot of just machine learning coming just from data. Organizations have tons of data. Traditionally, they've been using data warehouses and such to extract insights. Now they're replacing with machine learning techniques because with lots of data, with computing being available, now you can use other techniques. So you don't need to model, let the machine learn. Right? If you have enough data, like machine can learn the models and then whether it is identifying things, detecting, predicting, it could be fraud, it could be like an upsell opportunity, it could be any of those, right? And from being more rule-based and like kind of structured data analytics, insights-based models, which is how it used to be all these years, now there are also machine learning-based models possible, right?
So what is this on quantum safe applications? Why are people talking about the applications have to be quantum safe?
So we are one of the largest quantum software research groups in the country on the software side, not the physics side, on the computing side. Very quickly it turned out like when we had about 16, 17 people in the room, around 8 of them were from banks. I was very surprised because banks are not the ones that will go and jump at new technologies. And then it turned out it's not that they wanted to adopt, they didn't want to be blindsided, especially on the quantum crypto, right? So 2 years back, every bank and you was talking about it. Today, if you do the same round table, probably 1 or 2 will come. Reality has set in. Quantum is not going to be real. I mean, in actual computers coming and in use for not less than 10 years. So the hype is settled. I don't think there's any, yes, it's a worry. When those machines become real, it's a huge worry. So banks are all tracking it, but nobody's doing anything about it. As far as I know. At least I know all
No,
the major...
my worry is if hackers get onto it faster than the providers, that is where the worry is.
Yeah, but the machines are...
I mean, it just takes one guy to invest that much and then hack into a bank. And if it is not a quantum safe application, then millions of depositors are at stake.
They're tracking. I mean, like I said, I was surprised that banks were the front runners in quantum interest. That I would have expected a technology company like a Microsoft or a Google or such to be more interested. But banks are more interested and they continue to be interested. I'm saying the fear that they had 3 years back, that it could happen anytime in the next few years, has settled down because the reality is very, very clear. Like we have a national quantum mission. We are also part of that. So there was a consultation meeting where all the quantum research groups in the country were at that meeting. The mission, so the principal scientific advisor and the DSC secretary ran the meeting. There were about, I think, 80 research organizations and 300, 400 people in the room. Amazing, it was very, very good session. And they are talking about getting a basic machine in the country, maybe in the next 5 to 7 years. A basic machine. They're not even seriously usable machines yet.
I'm sorry, I'm extending this discussion a little bit more. Yesterday, the Prime Minister inaugurated Param, right? I'm sure you must have read about it, right? So, I mean, it's not that, India as a government or as a thing, we are not investing in it or
India.
things.
This is globally.
Yes,
They're
okay.
a little behind.
Okay.
Globally also, like the machines that IBM has is super expensive. You can't do anything with it given the cost. It's more a technology demonstrator. Even that is like at least 5 to 7 years before it can evolve into something usable, cost aside. Then the cost factor comes. So it's not about us being behind or ahead. I was referring to it more as a state of the technology globally. We are probably a few years behind. Not that far behind. Thankfully, quantum mission is a good initiative. Like the same, like many other technologies, they have leapfrogged us before even we understood, like they went off to the next generation. So idea is like, let's not be the same with quantum. We may or may not get the machines ourselves, but let there be understanding, let us be in the front lines. Like 5G we have done, we're not in the front lines, but 5G we are not doing catch-up game. There's so much of investment. We've been a 5G hub for several years. IT Hyderabad is a major hub. And like, so while we couldn't create the technology for 5G, we are early adopters of 5G. Today probably one of the largest rollouts in the world is in India. Not just application side. So the idea was that like, you can't just roll out the technology and not have anything using it. So they invested a lot of effort in trying to build solutions, how to use 5G, but the bigger mission was 6G. Now, the government's idea is that like, we should not be now even just catching up, we should be creating those technologies. So, quantum mission is similar. I mean, maybe we can't create because all the others are much, much ahead of us, but we are not going to be left behind. Okay. We are going to have our own computers and like, even if it's behind, it's going to be only a few years behind, not that we are suddenly caught unawares when suddenly somebody says embargo, we're not giving you the technology. We won't be caught completely unawares, so at least we'll have our own technology.
Thank you. So let us move from, say, technology to a little bit of real world again. We have Anil from the OSB Bank. So Anil, can you please educate us on neo-banking a little bit? What are some of the emerging spaces? And how is it that some of the fintechs can work with GCCs, especially in some of the, in fintech areas across in general, especially in banking? Yeah. Thank you.
Sure. So first I would just like to just touch a little bit on GCC and then I'll go to FinTech and then I'll go to the neobank. I've been working with the GCCs for 20 years now. I mean, 20 years back, if you asked, was there a word called GCC? No, it was not. It was contact center, call centers. You had MNCs or, foreign companies setting up their operations in India purely because of cost to get cheap labor. But gone ahead, we have seen that from there they started, investing in some niche roles, starting from processing and calls. Then they went into risk analytics, finance, chartered accountants, IT hubs. They started seeing development centers coming up. So 90s it was call center, contact center. 2000 there was some research and development happening. Further ahead they became center of excellence. Now today in 2024 the word is GCC. That is Global Capability Center. What is so different today? Today what is different is that they're looking at their centers in India to tell them how to run their operations, how effectively they can run their operations, what are the new emerging technologies, what are the ideas that they can incorporate in the banking industry, in the finance industry, in the IT industry, because most of the startups are right now in India and they're coming with solutions. They understood the problems of traditional banking. They understood the problems of, where the cost was there, how much time it would take to open an account, what were the hurdles for the customers, what are the regulatory expectations. They kind of understood the market really well, and they start coming out with solutions. And that's why we call it now the Global Capability Centers. So interestingly, I work with, a lot of startups. Very recently, I remember when I was in the UK, I was told that, there's a particular area, lot of work, they want to cut costs, they want to see value, how can you do it? Very simple. We had RPA in India with our IT team, so I told them we'll connect, we'll do it. We were able to cut costs by almost about 30 to 40% savings. RPA is what? Robotics process automation. You have a bot that does all the work that a manual person does. It does your calculations also. So a lot of banks have this requirement where you sit, do calculations all, but robotics does that for you. But now moving ahead, AI has come into the picture. What are the banks doing today? Now, when you talk about neobanks, what's the difference between a neobank and a traditional bank? A traditional bank always has a building. You go there, you do your work. I remember, say, 25 years ago, if my dad had to send me some money to college, he will go to a bank, take a draft, post it, it'll come to me, I will take it, I will go to the bank, give the draft, wait in the queue, get my money, happy with those days getting your allowance. But today you don't do any of those. Today you call your parents or you call somebody for money, it's instantly transferred in a matter of few seconds. That's how digital bank has come into the picture. Now, something interesting that has come up, is the neobanks. Neobanks don't have a physical center as such. But what they do is you have a, what you call a web space where you interact with, the virtual reality, and you try to, tell them what is your requirement. And you will get a response, you will get transactions happening through that. And artificial intelligence plays a lot of role in this. It is evolving from traditional bank to digital bank, now to neobank. Neobank is mainly, I would say, the interest of millennials and Gen Zs, who don't like interacting very much with people. They just like taking their mobile and getting things done very quickly. They like to see everything happening, with the touch of a screen. That's what our new age generation is coming into, and that's what neobank is actually catering to. Where you want a loan, you don't want to talk to somebody, you don't want to do anything. These days, even loans, all of you, if you have a good credit note, you have been told time and again that you got 10 lakhs or 20 lakhs waiting. At a click of a button, the money is into your account. That means there is some kind of a data that they have analyzed you. They know your income, they know your assets, and they know what you're capable of paying, and they know what kind of loan they can give you, which you can repay back. They have all the data. So data has become very important. Now with that data, they know each individual what they can give to, how they can do things. Neobank has come with something more interesting right now, is that people travel a lot in the world. Indians are known to be big-time travelers, not like what you used to see maybe 15 years back. It was our first trip. Today is 100 trip you're going. People are traveling. The airports are filled with, students and people moving across. They all need foreign currencies. Some of us still rely on our traditional bank, pay a higher charge and get it done. Neobanks are coming specifically for people who are traveling, saying that, you can use this money, come back, we'll give you the same money back, balance, conversion charges, everything set and recorded. You're not going to have any problems with, the rates going up and down. So neobanks are coming up with too many ideas. One of the risk factors is basically knowing your customer. How do you know your customers? And neobanks are coming up with more digital technology. I moved to Hyderabad just about 3 years back, and I walked into HDFC saying that, just come over here. What is your process? They said, just sit here. They asked my Aadhaar card. They took my fingerprint. Done. My address has changed to Hyderabad. I said, my wife is there. She's a joint account holder. They said, don't worry, don't bring her to the bank. We'll do a video call and we'll do it for you. She just had to hold her PAN card, her Aadhaar card, everything done. Her account was open. We are generations ahead from what we used to do in banking. Now, the question is, where are the opportunities for our fintech startups? Lot of opportunities. You just have to walk into the banks and understand where their pain process is, and you have to give them a solution. Yesterday I walked out in the counters. Counters were interesting. People asked me, what am I doing? What's my name? I told them, what am I doing? To the point. So we can offer you this technology which helps reduce, your transactions and all that stuff. So you are in the banking industry, you're a GM, so what about, in terms of tax? This is the opportunity. So specific to the point that gets my attention. Not that, that we have something to sell, maybe it might interest you, not interest you, but they knew exactly what I wanted. They were very quick in catching, the requirement or, what I work into. And I think that's where fintechs come into the picture. Even if you're looking at neobank support, they need big time support. They need support in terms of customers. We spoke about fraud. Today morning, few of us in the panel, we were talking about fraud. I've got a certification in anti-money laundering, a gold standard certification. So what I've been taught is 80% of the fraud happens inside the office. It's only 20% that you can expect it from outside happening, coming and hacking and all that stuff. But 80%, which does not go announced because it impacts your share value, prices and all that. It happens inside. What are the solutions to ensure that, it does not happen to the business? Where are your biggest risk? What is it, that value that you can reduce the time? If it takes me 10 minutes to open an account, can you make it to 1 minute? What are the technologies? Have you run through the whole process? What are you going to bring into the table? So that's where neobanking is coming into the picture. And as I said, it will take a little more time. It is more for the younger crowd that's coming up who will not go and visit a branch, who does not want to, connect with people. They just like to do it on the touch of the screen.
We'll go to the Vishnu. I had a very interesting conversation with him today morning. So on digital assets and Finternet, etc. So Vishnu, can you please throw light on the entire space of digital assets? The way they are emerging. What is this concept of Finternet, which is emerging in a big way? And even Nandan spoke about it very recently, including his chief architect, Pramod Verma. Go ahead, yeah.
So as a founder, I try to live in the future. So obviously, there are companies exist to solve solutions, make money, maybe improve convenience a little bit, and then there are companies that try to completely disrupt the way we look at the world. So let me paint a picture. Imagine a world where you don't have to carry your debit card, your credit card. You are just walking. There's no phone. You are the person, you are your asset. And you are the one who's carrying your real estate, your car, your bank balance, your mutual fund, your FDs, everything. And imagine a world where you can borrow against it, not from a bank, but from other people using a technology that happens in the background. We'll call it some magic technology. We don't have to get into the boring science of it. Now that is a world, like if you are 20 years old today, you will not be going into a bank and asking for authority where you trust one institution or one country or one brand and say, okay, I will borrow from this because it's safe, or I will lend to this because it's safe. You will want to interact with the crowd. You want to maybe lend to somebody in America, in China, because you already trust the magic technology that is happening behind it. And guess what? We are already doing it today. Everybody on your phone, you're using mobile internet. You don't know what's happening behind, but you're communicating with the world. Just take that same magic technology, use a little bit of cryptography, and that word is very, very important. Oh, I see digital twins here, so he appreciates what we are saying. And that's it. You have essentially built on the internet to create and unlock possibilities which will be immense. So now let me bring it back to 2024 and what we are doing at Asset Vault. One of our clients is in China. He wants to get an exposure to a $1 million apartment in Los Angeles. Unfortunately, he cannot afford $1 million, but there are 10 of his friends that can afford 1 million divided by 10. So what we've done is we've tokenized this real estate, this house for $1 million. We've broken it into 1 million pieces using something called blockchain. And it's a good application because now suddenly somebody sitting in China can benefit from real estate growth in Los Angeles. They don't even have to go to Los Angeles. They don't even have to show KYC, nothing. We take care of it. When I say we, it's the blockchain. So my only word of advice to some of the young founders or possible founders here is try and become very multidisciplinary. Learn a little bit of physics, learn a little bit of cryptography, learn a little bit of mathematics, learn some law, because all of blockchain is law. Because how will you enforce, let's say I own a piece of property in Los Angeles, but I am not there. Who is the custodian? How do I trust that the custodian is not a bad actor? So all of this, the world is getting more and more multidisciplinary. So the more diverse points of view you have, you will be able to benefit from this futuristic world. So tokenization is another word that I want you guys to take away with you. Cryptography, tokenization, Finternet. So what Nandan Nilekani was mentioning the other day is he's already thinking like 20 years ahead. Imagine the Aadhaar ID that we have. Similarly, there'll be another kind of an ID that you will have, which will be on the blockchain, protected by cryptography and hashing. And this is where, again, quantum computers come in. So let's say 30 years from now, somebody builds a super strong quantum computer, then the current mathematical protocols can be broken. I'll give you a very simple example. If I ask you, what is the product of 23 and 37, anybody here can take a piece of paper and do it. 23 and 37 are two prime numbers. It's 851. I just did the math. Imagine I gave you a product, the final answer, and then I asked you, now tell me the constituent primes. There is no algorithm for that in the world today. You will literally have to start at 3, 7, 11, 13, 17. And the larger the number I give you, computers will take age, the time will be like the age of the universe. This is the problem with classical computers. Whereas a quantum computer uses superposition of bits. So zeros and ones at the same time. So it reduces the time to a few minutes. Doesn't exist, as Ramesh said. Hopefully, inshallah, it will come in the very soon. Then all our secrets will be out in the open. Because I will capture the secret today. I'll wait for 20 years until somebody makes a quantum computer. AWS is making a lot of progress. Then I will purchase that and break the codes, which is why government bodies, banks are very interested in this technology. So I'll pause there and we can continue more.
Yeah. Sorry, Sonali, we are coming last to you, unfortunately, because you joined late, okay? So I couldn't really accommodate in the flow, okay? So, Sonali, I think you have a lot of experience with public policy, government, all of that. So what is the government policy on regulating the entire fintech space, especially around emerging areas of lending, payments, and we have seen a couple of hacks recently. Anyway, we need not touch upon that. But essentially, what is the government policy or is it emerging? Thank you.
Thanks, Ram. Couple of points. Firstly, I did a lot of policy work. I right now work a lot with startups. So very interesting discussion on this panel. I think just by way of introduction, I look after various businesses at the bank, startups and the gig economy being two new areas that we are focused on, in addition to deposits on the government and institutional side, as many of my friends on this panel have spoken. So let me just give you perspective on how the overall landscape banks vis-a-vis fintechs is changing and what the future looks like, right? So firstly, I think banks and fintechs have had a happy marriage right from the time fintechs were not even known as the word fintechs. Because banks have been powered by technology historically. Jargons change, but technically it's the same thing, whether it was earlier the core banking platform or today they are stacks sitting on top of payment gateways that we call startups and fintech. So the marriage of startups and banks goes back to as long as banking has existed and technology came into banks, starting with your core CBS systems. As far as I see the government policy, I think we all know that India's fintech story is something that is known globally and is actually a part of India's soft power now, much like China took its culture as part of its soft power globally. So India's fintechs, whether it's UPI, etc., is a big part of India's story that's being told globally. And we've seen payments being disrupted in a big way in the last 10 years. I think right after demonetization, the kind of changes we saw in the payment ecosystem have been quite phenomenal. As far as the next 10 years on fintechs goes, I think, let me just say that as a banker sitting here, I can tell you that the next 10 years will belong to cross-border payments. Because if you look at the new regulations that have just come out by the Reserve Bank, and we are building out various strands of those businesses, is not just how you travel, which is what my colleague on the panel just said, is about, that's really one small sliver of LRS. But if you look at the government's perspective on exports, and it's true that unless India supplies to the world, in addition to supplying to its own markets, India's growth will not leapfrog. And therefore, to take exports from 200 billion to 500 billion, you are going to see cross-border technologies emerge and cross-border fintechs emerge. I don't know how many of you are aware, but the new regulations are opening doors in ways that the world has not seen before. And it's going to disrupt cross-border payments in many ways. You're going to soon see Indian banks competing with global banks for large players across the world, and that's going to be a phenomenal opportunity that will unfold when you talk about global payment processing. So I think the next 10 years in fintech are clearly cross-border, in addition to, of course, a lot of work that is happening on blockchain and the digital currency. Coming to neobanks, as you spoke about, I think there are lots of neobanks in the country, and lots of banks themselves, as my colleagues on this panel have mentioned, are moving down the path of digitization at a pace that has been unprecedented in banking. So today, as HDFC, we've been the first bank to really focus on the gig economy, because if you look at the spectrum of gig, I mean, frankly, this is the whole self-employment space, right? Today, we use fancy jargon because there's a platform there which is around gig. And it's true that banks have looked at self-employed people opportunistically, but now at HDFC, we are taking a very systematic approach to the self-employed, because the future of India will be powered by self-employed, and small entrepreneurs have actually contributed to the nation's growth. And now it's the technology platforms that are aggregating work which are actually going to contribute to the future. So you will look at banks coming up with digitization when it comes to account opening, like you spoke about it, when it comes to lending, when it comes to new to credit. In fact, our whole gig program is designed to enable the new to credit people to participate in the economy fairly quickly, within just a few clicks. Like you mentioned, your wife got her account. So I think, lots of good things are happening, whether it's on insurance, whether it's on credit, whether it's on banks. And I think the banks and the fintechs will grow together. So whether the valuations will increase for banks or for fintechs, I think it's both one stacked up on the other. Because remember, at the end of the day, the money sits in a bank. How much ever digital currency might change, the banks continue to remain the backbone. The technology players build on top of that. And I think that's where there's a happy marriage. And that's something we should all remember, because I think the discourse in general always goes about banks being monolithic institutions and the fintechs being the future. I think one cannot survive without the other. So we should recognize that in the discourse as it's talked about. And yes, banks have a higher degree of responsibility, because remember, so there are ways to do things and marry technology with a regulated industry, which I think Google has done well. And I just leave it here to say that, fintechs and banks will be the future, hand in hand together, because like you said, quantum computing is something where we will look at it as banks. Whether it's digital assets, banks will look at it, because obviously as the custodians of the nation's wealth, banks do have the responsibility to ensure we provide our customers with the best possible services and technologies. So hopefully we'll engage with a lot of you in the future. Thank you.
To stay informed about the startup ecosystem, subscribe to My Startup TV.